Hello and welcome from me, Philip Nothard and Curtis Hutchinson to this special Motor Trade Radio interview podcast. Many thanks for joining us for this in the latest series of special weekday interviews themed around sharing insight and best practices across the car retailing community.
Today, we're delighted to welcome to the podcast for the first time Mike Hawes, CEO of the Society of Motor Manufacturers and Traders. Mike's led the SMMT since joining from Bentley in 2013 and has been vocal in his lobbying on behalf of car manufacturers through various regulatory changes, most recently WLTP and RDE, also, of course, the whole Brexit debate, and now the challenges of operating during pandemic-enforced lockdown. So welcome to the Motor Trade Radio podcast, Mike. Never a dull moment, I guess.
Hi guys, no, absolutely. It's I was just thinking a while back. I joined the SMMT some 7 years ago, and I suppose I had I had a decent honeymoon period. I think 2013 to 2014 was okay, but then we've had Dieselgate, we've had Brexit, we've got COVID, a bunch of regulatory changes, and so what happens next? I don't know. I hope I'm not a bad omen. During that period, we also had the record ever year of new car registrations. So I can't be too much bad luck.
No.
Swings and roundabouts.
We won't be getting the hashtag blame it on Mike, will we yet? So you'd be all right. But yes, a lot happened. I mean, what 7 years though, Mike? As you say there, just when you start to think back at some of the things that have happened and where the SMMT have been working through it and supporting the sector and what's happened to the sector it's a very quick 7 years, I suspect, as well.
Yeah, it feels that way, and what I found fascinating, and it's why I still very much enjoy the job, is that variety. We're very lucky in the SMMT. Yes, we've got the car manufacturers and importers as members, but also supply chain, aftermarket, not just car, but bus, truck, coach, taxi, trailer, and each has their own challenge. There are some that are common, but often there are regulatory issues or market issues which are unique to them, and it sort of keeps you on your toes, because trying to keep abreast of all the changes that are going on, especially when I'm sure we'll get onto this, some of the technological changes that are happening, it's a massive upheaval that's taking place across the sector, and there's just standing still and doing what you've always done is just not an option, and the SMMT's got to be like that as well. We've got to make sure that we're flexible and that we respond to these changing challenges. So yeah, it keeps everyone on the toes, keeps us busy.
Never a dull day, is it? Never a dull day. But welcome to the podcast. I know it's the first time that you've been on it, as Curtis said, and it's going to be great to get some of your take on some of the industry themes as you've just been talking around there, and headlines we've been covering in recent weeks and months as well. So, before we start to think about 2021, and we're sort of we're halfway through the second month of the year already, and think about the sector's going to look like. Maybe just worth us talking through some of the 2020 and the impact of COVID, obviously, on the new and used sector for the cars and the van market, as you've been saying there, and particularly the UK manufacturing. And you talked around the cumulative sort of impact loss of 20.4 billion of revenue to the sector. So do you want to just talk us through what your views are on the 2020 before we try and forget about it and move on?
I think to a certain extent we all want to forget about it, but it's indelibly stamped. Yeah, it was an incredibly difficult year. The numbers speak for themselves, and we've almost become sort of inured to the severity of those numbers. Last year, retail new car sales were down nigh on 30%. Production was down about the similar percent, lost over 20 billion quid worth of business on the retail side alone. These are phenomenal numbers. Yet, when you look back on the year, to a certain extent, you can say, well, the fact that we were only that much down, despite lockdown, which was, 4 or 5 months of the year, including taking a massive chunk out of March 2020. I suppose there's a degree of, resilience of the industry that it demonstrated, being able to get open as soon as possible. Retail was was able to move to a click and collect, which has served it well for this year, which I'm sure we'll come to in a moment. Production are also both putting in COVID secure preparations. But you think back of the year in terms of just how hard it was, especially in that second quarter. You didn't know how long it was going to go on for. You weren't exactly sure what adjustments you needed to make to your businesses. We saw production close not because they couldn't operate securely, but because of uncertainty of supply chains and a complete collapse of demand. It wasn't unique to the UK. You saw similar levels of demand fall in major European markets. Fortunately for some of our brands, some of our companies, they're global operators, and the way China rebound helped some of our manufacturers to a great extent. And USA probably wasn't as badly affected in terms of total loss. I think they were down about 15%, but we're down 30%. So those that were more exposed to global markets had perhaps a greater degree of resilience. Those exposed to European markets, then obviously you're in the lap of the gods about how the pandemic was spreading across Europe, undermining demand, causing the showrooms to shut. And then at the very end of the year, I suppose we had one bright spot. We actually got a Brexit deal. So it wasn't all bad news last year.
Now, talking of Brexit, yes, we had the deal at the end of the year, but it did cause disruption through much of 2020. Now that we've got the deal, what's your view on, does it actually provide the certainty the sector actually needed? And what are you hearing from OEM members about car and parts supplies and how frictionless they actually are at the moment?
Yeah, well, certainly it's not frictionless. First of all, I think when we look on the Brexit deal, you've got to look at it over the course of the 4 or 5 years, 4.5 years since the referendum, and how the politics changed. Not fundamentally, because obviously the vote was to leave, and that's been this that hasn't changed. But if you like, government ambition about what the deal should look like did undoubtedly narrow from where Theresa May was at, thinking about Chequers, and incidentally Chequers would have delivered a lot of what the industry wanted. Thinking about where she was and her government in trying to not remain within the single market, but have a much closer relationship than perhaps where we're ending up now. Boris Johnson came in and it's very much to the harder end. Yes, we can talk about the precedents that has been cited in agreeing the deal, on different aspects. But I think what became apparent, amongst the industry at the end of last year was that sense of relief that we've got a deal, because it does deliver a number of the things we needed. First and foremost, to the greater, but for most parts, components, products, avoiding tariffs. That was absolutely fundamental, absolutely dodged a bullet on that one. There is also an automotive annex. There's not many annexes to that deal, and automotive is one of the very, very few sectors to get one, and that gives us a basis for future negotiation. It allows for accumulation, and in other words, parts made in the UK can count towards European rules of origin and vice versa, and that's very, very important given how integrated we are into the European automotive industry. But it hasn't all been positive. I mean, we are seeing friction at the border, without doubt. There is no regulatory agreement. There's a provisional agreement to hold for 6 months on data. Then it'll be, but we need that to be a permanent agreement, because increasingly in terms of automotive, the importance of data and data transfer is very much increasing. And it's also more difficult to move people. That's particularly important to manufacturing. But I think overall, where the industry has said sense of relief to get the deal, and also probably heightened by the fact probably 2 weeks before it was actually signed, we were getting increasingly pessimistic. Not so much that there would be a deal, but whether it would actually work for the automotive industry. And it must be said, the UK government did, over those last few weeks, defend and seek to support the automotive industry. Achieving that automotive annex, getting a 12-month grace period on rules of origin, and above all, on the basically being able to negotiate provisions under rules of origin that ensured, for instance, internal combustion engines and hybrids are free of tariffs now. And as we move towards an electrified future, there's a window of opportunity to still benefit from those zero tariff rules of origin, providing we can gradually increase our levels of content, and that means battery production. So there is no denying the government tried to safeguard this industry. It is, we were saying for the last 4.5-5 years, Brexit's always been about damage limitation. And I think where we, as an industry, we probably did as well as any in what is in securing what is in that deal. And if you look at what subsequently happened to, voices come out of, say, fishing and some of the other industries, it does prove that just how important it was to get a good deal. If we hadn't have got that, we'd have been facing even more difficulties than we're currently facing.
And Mike, just picking up on your point about, there is still friction at the border. Mm-hmm. Do you see that as being part of this new way of doing things? Are these teething problems? Would you envisage?
Absolutely. This is
friction becoming less?
Yeah, I'm afraid this is the new normal. Import declarations, export declarations, phytosanitary provisions through rules of, we've got a 12-month grace period on demonstrating, proving rules of origin. That's incredibly important. But we are, this was never going to be a free deal. We are seeing friction at the border. That friction is there in perpetuity, or unless they can develop some new ways of managing that administration. And that's going to take 2 or 3 years. And think about some of the application of IT may offer you a future which is easier. But at the moment, for the foreseeable, this is the level of paperwork that is required to import and export products. We always knew this. This industry, this sector was probably as well prepared as any. But you're always at the whim of how everything is moving. We hope that the systems and the application of the new rules beds down a bit, so it does get a bit easier. But there's at the moment we're still in an easement period, so I'm afraid it is going to be difficult. And I know some manufacturers have been. Well, most of them are paddling furiously below the surface to keep production growing. Some of them have even been using air freight. Everyone's got it on, excuse the pun, on their radar as a way of ensuring that production can be maintained in the event of further blockages. So it is a more difficult situation, and it is adding cost. But as I said, that is the price that is part thereof the deal. It's for both sides. Have to operate in this new way, and it is difficult. Hopefully it'll get a bit easier in time. For the moment, it is about keeping production going.
Yeah, and as you say, that it could have been worse is the way of looking at it, couldn't it? Because it could have been all that and tariffs and other challenges around the backstop with Ireland and other issues that were there within 2 weeks of the deal being done, weren't they?
Yeah, and Northern Ireland is another set of complications. Which clearly is not working as well as all sides want it to work, and of course, given the particularly unique challenges around Ireland, it is absolutely important that they're resolved as quickly as possible. I think what this all showed in the last couple of months have demonstrated is that we needed that transition period. The original agreement was for effectively a 21-month transition period, so we could have adjusted. We would have had sufficient time to make sure everything was working smoothly. In the end, we didn't get 21 months. We got 7 days, and that was 7 days over Christmas, when a lot of the industry was in Christmas shutdown. So and indeed, we were one of the first sectors to ask for a transition period, specifically because of the complexities we knew that would arise. Unfortunately, negotiations ate into that transition period. We are where we are. The industry's adept, it's agile, it will make it work, but it is not easy.
No, I agree. I think, like you say, things will get easier, but it's going to take time, and like you say, systems and processes, and even things like the blockchain and other answers to the rules of origin that manufacturers are looking at. These things will take time. So, no, I agree. Talking about today and now, really. So if we look at the new and used market of sort of year to date. The new car market is down 39.5% in January. The positive way of looking at it is we did 60.5% of last year's figure in January in a lockdown 3. What's your view on the sector as it looks at the minute, nearly 2 months into 2021 in the third lockdown? And obviously you've reforecast your new car and van market as well for the year into 2021 and 2022.
Yeah, well, I'm a glass half full merchant, so I'll take the reverse of what you said. The fact that the industry delivered nigh on 60% of last January's new car sales is, I think is a remarkable achievement, and especially given the other uncertainties we saw through December and indeed a lockdown back in November. And I think a lot of the retailers have been very clear to point out just how prepared and they have the systems in place that can deliver for customers. But for many, you can't replace the showroom experience. And we know showrooms are shut. They're closed now at least till March the 8th. We don't know exactly when thereafter they will be able to open. We're certainly trying to make clear to government the unique nature of car showrooms, and the fact that compared to other non-essential retail, these are big spaces. There's an indoor, there's an outdoor, there are often high ceilings. It's low footfall. You can easily operate on an appointment-only basis. And on top of that, they've already got the COVID secure adaptations in place. So, they're not going to be a hotspot of transmission. And when we are looking ahead to March, we all know the critical importance of March to the full year figures. We're trying to get those showrooms open as soon as possible, as soon as it is safe to do so, because what we did see last year is we lost about 750,000 units new car sales between going into lockdown in March and reopening in June. And at the end of the year, where did we end up? 750,000 units down. We never got that back. Yes, there was a slight spike in July, but that most of it we just didn't recover. And that's a product of how business and consumers feel, how confident they are. We know the impact on the economy is going to be damaging. Unemployment is going to rise once the furlough ends, and that will feed through to new car registrations. That's why the forecast was reduced down to about 1.9 million for this year. We hope we are being perversely a bit pessimistic in that, and that there is a boost. The Bank of England, the chief economist, talking about a sort of spending boost, and there may be some factors at play in that regard, in terms of will you still be confident about going on holidays, long haul holidays in particular. If not, there is consumer savings undoubtedly in there. But I think the critic, but would we be in a position to catch back those sales, those registrations that we've lost? I'm a lot less certain. The one thing, there was some positivity last year about used, and again, businesses have adjusted, that balance between new, used, service, repair, and so forth. People, we also have in our membership the SMMT, the bus manufacturers, and they've had a torrid old time. I mean, imagine your business where you turn on the television every night, and government ministers, including the Prime Minister, are telling people not to use your products. That's effectively what you're saying by don't use public transport. That boosted the used car market, but it's been hugely damaging for the bus operators, bus manufacturers, and so forth. Flip side of that is obviously commercial vehicles have done much, much better. So it is a degree of swings and roundabouts, but overall, the market was down by significant margin. This year will be a recovery. A year of recovery, but it's going to be 2 or 3 years before we get back to the volumes that we would describe as normal. The sooner we get there, the better, and the industry is very good at working in difficult markets in the UK, but it'll still be a challenge.
And Mike, following on from that and sort of focusing in on March, you said last week in one of the press releases the SMMT put out that every day that showrooms can safely open will matter. Now, yes, we've been talking about March. It is the all-important month of the year. It looks as though showrooms won't open until the 8th at the very earliest. We don't know if they'll open after the 8th. So what will this actually mean to the new car market? Because we have click and collects and home deliveries. Can this make good on some of that shortfall?
To a certain extent, but I think, it's those that definitely want a car, will put orders and they can order online, spec online and so forth, and the transaction can be done online. But invariably, I don't think any manufacturer goes into March with 100% of their expected sales volumes in the bank, so to speak. And a big part of that is the customer experience in the showroom, being able to look at different models, being able to talk about the various features, being able to test drive, which is not something that is certainly within in the spirit of the current lockdown. That is missing from the consumer process at the moment, and that's the bit that's going to be missing. So yes, there will be a degree, and it'll probably vary from brand to brand. It's not going to be like we were in April last year when virtually, effectively no cars were sold. But it's, considering we're normally looking at upwards of 400,000 units, we ain't going to be there. That's what I said. Every day matters. If we can't open on the 8th, I'd like to open on, the first day after the 8th that we can, because of the importance of March to the overall performance of the year and the business planning that hangs off this particular month. Not least because, a strong new car market is a real boost to the economy in terms of VAT receipts, VED receipts, and so forth. And if you look at the economic situation the UK is in, every pound counts too.
Yeah, I think you're right. That I think I think the first quarter of the year accounts for 30% of the overall in terms of the volume. So it is crucial that we get these showrooms open. And the sooner they are open, as you say, you've got that gap then between the next plate, haven't you, in September, which allows for that recycle again. The longer the closer it gets to the September plate after March, when somebody can swap their new car, the less chance you've got of getting that new car market again in September, haven't you, to a certain extent. So as you say, it's a crucial time for everybody. Thinking about electrification and the topic of the moment, and unless we want to spend another 2 hours on this podcast, I mean, we could do on the topic of EVs, but with EVs and PHAV forecasts now to account for 1 in 7 new car sales by the end of this year, what impact has the recent events of the last 12 months had on that EV sector, in your view?
That is a really good question. It is difficult to draw out specifics because there's so many, there's been so many moving parts going on behind the scenes. We've had COVID, we've had showroom lockdowns, you've had increasing models coming to market, and these are new models often with long wait lists. There's been the economic impact, and it's hard to draw out the actual specifics. The long-term trend, as you rightly identify, though, is the customer is moving towards acceptance of electrified vehicles. The speed with which he or she gets there is much harder to forecast because it's obviously a product of model choice, availability, in other words, supply, what the charging infrastructure is like, and of course, affordability. The entire industry is moving in this direction. It has to, because of both societal expectation and, yes, regulatory requirements. For better or worse, I do a bit of media discussions on these, and some people do allege that the industry has been slow to get into electric vehicles. To which, I would say, well, an electric vehicle that's put on the market today was probably a corporate decision taken 7 to 10 years ago.
Yeah.
That is the development scale. And the fact you are seeing so many new models coming to market, there'll be more EVs launched this year than either diesel or petrol vehicles. This is the future. And the industry's effectively bet the farm on this technology, and it needs to have that payback. And that's about getting those vehicles into markets to derive some economies of scale. The quicker that can happen, the better. So we need to see the market grow. There are still barriers there, as we've described, I'm sure we can talk about. But the industry's commitment, I don't think, is remotely at question to this change. It will get there. Hopefully, in the UK, it can get there by 2030. I think, effectively it has to. And the different technologies, have a different role. There is still a role for plug-in hybrids and hybrids in this transition, not least because we still have some, we're still in that early adopter phase. It's getting to the early part of mainstream adoption, but we're not there yet because of those issues that we've spoken about.
And sort of two broad follow-ups with that is obviously we know that the government's decision to bring the ICE ban forward to 2030, it focuses the objective to a certain extent. However, it's done. Whether 2030 is a realistic deadline or not, it's still a deadline that both the OEMs and the retail sector and the automotive sector in whole focus on. But with the impact of that, obviously the revenue that the government, in terms of through fuel duty, how do you think that will change as we move through this transition into EVs and the government then start to see that drop in fuel duty that comes into the Treasury?
And absolutely. And it's probably a nettle the government has yet to grasp. It knows it's going to get a drop in fuel duty revenues. It's not entirely, because I think the majority of fuel duties actually derive from the commercial vehicle, haulage logistics sector, rather than passenger cars. It's cars and vans that have to meet that 2030, 2035 deadline. So there will still be revenues coming, but it is undoubtedly going to be a shift. And we all know that the logical, ultimately you've got to go into a sort of a use of pays per mile approach. That's road pricing. There's various iterations of that, whereby you pay for the journey rather than the fuel. But that's difficult. It is politically very challenging. For the last 10 years, successive chancellors have balked at the opportunity to put up fuel duty because of concerns about a so-called war on motorists. So making a shift from pay as you pump to an alternative form is politically very challenging. The automotive industry is a major contributor to exchequer finances in all its forms. So equally, we would say that you also, in this transition, which is something that's not spoken about too much, need to maintain a healthy market. If you move to a system which is punitive to older technologies, just to encourage the newer ones, given those affordability issues, there's a real danger that the market contracts. People basically sit on their hands. They say, well, I can't afford, a new electric vehicle, so I'll continue to drive my old one for as long as possible. I'll just drive it till it's at the end of its natural life. And that would not be good for the market, would not be good for the industry, would not be good for the government, and it certainly wouldn't be good for the environment, because you're keeping older cars on the road for longer. So you need to take the consumer with you. You need to make sure that the vehicles are affordable. That's where incentives come in. And also the total cost of ownership, which is increasingly what people look at, is compelling for these newer forms of technology. And the cost of fuel, the cost of electricity, the road tax, the VD, whatever it is you want to call it, is a critical part of that equation. What was interesting last year, we did see 186% growth in EVs in the UK. 2/3 of that growth came from the fleet sector. Now, they're the ones who do the pence per mile calculations, and the numbers are beginning to work. They obviously have company car tax incentives and so forth, which, are additional incentives that are not there to a private retail buyer. So you need to have a whole package that compels all consumers to make this transition in a positive light.
And just finally on this point, and I know it's probably me and Curtis have probably been waiting to ask this question, and it's just been announced this morning as we're recording today. But the announcement from JLR around their strategy to keep the UK plants open, but under the electric, becoming an all electric brand in the JLR. What's your views on that announcement? I mean, it can only be just positive news, can't it? One, in terms of keeping that production in the UK and helping to support the acceleration of EV. But what are your takes away on it?
Yeah, absolutely. I mean, first of all, there's that commitment to retain their manufacturing footprint. That's critically important. They're moving very quickly to effectively an electrified lineup. Interestingly, there's hydrogen in the mix as well, which is interesting, and I kind of get. But what they're doing is setting out their path for the future, and it is a path that aligns with consumer expectation, government ambition, and basically where the global industry is going. So it is, it strikes me as a very well considered and clear strategy policy. It's something that they have to do, and they've got a number of advantages, as was explained by Thierry Bolloré in his speech this morning. In terms of the brands and the strengths of the two brands that they have, and they can use that to their advantage. They're not in global terms, they're not a massive automotive company. In UK terms, they're huge, and they certainly want to use that scale, that size that they have for agility, and the speed with which the market's changing, industry is changing. You need to be agile. So that's they're obviously seeking to use that to their advantage. But overall, I think I think everyone in the industry was waiting to see what the new strategy, the future was going to look like, and it is becoming increasingly clear. And providing we can build upon the exceptional talent that we have in the UK, both within JLR and across the industry, working with universities and so forth. That's where the innovation is going to come from, and we need to grasp that. So if their declared ambition is to be as agile as possible, that strikes me as a very sound and sage approach.
And finally, Mike, we started off talking about the various disruptions that had impacted the sector. And if there weren't enough disruptions in the automotive sector, we've also got Euro 7 coming up on the horizon. So what's your view on how big an impact Euro 7 will start to have really from this year?
Yeah, well, it's obviously still in negotiation, and we are part of those negotiations, because even though we've left Europe, we're still a very big market. And as SMMT, we're trying to make sure through the various channels that we have, both internationally and domestically, that we can try and shape the regulation as best we can. There is no denying that Euro 7 will be very tough when it comes in mid-2020s. You can add to that the backdrop around carbon ambitions. We know what the UK is, 2030, 2035. We expect Europe to, where it currently has CO2 legislation demanding 37.5% reduction by 2030. That's going to change. That's going to get tough. It's going to be 50, 60%, something like that, I'm sure. So the industry has to meet the carbon challenge, and it has to meet the air quality challenge. The two go hand in hand. We have the technological solutions. Euro 7 is going to force some of that. If you look on the European side, they're already using other policies to try and force the hand in terms of, I think Brexit, and go back to Brexit, is probably one of the best examples of that, whereby the requirement that a high percentage of a vehicle that is traded between the UK and the EU has to be, for electrified vehicles, of very high levels of rules of origin components, is compelling the investment in battery manufacturing in Europe. I hope it'll compel that similar investment here in the UK. So, governments are using all the policy levers at their disposal, whether that is trade, whether it's industrial, whether it is environmental legislation, to accelerate that shift towards cleaner motoring, both in carbon terms, air quality terms. Euro 7 is just one of those policy measures that they have. We know it's going to be very, very tough to meet, but it's also got to be practical, because across Europe, the pace with which markets move to electrified does vary. I mean, it is a product of affordability, affluence to a certain extent, infrastructure, charging availability. There's a lot of issues that come on that will determine the pace of change. You want to make sure that any regulation supports the industry in this transition, and also supports the consumer, because for the same reason I said earlier, no one wants to see a severe contraction in the market, denying people personal mobility, which has been taken for granted for decades, and is what so many it's what developing economies crave. Any government which is restricting that too much would need to be very, very careful, because there is the potential for backlash.
And as you said, the lobbying process is on. Well, it started, hasn't it? It started now. And will we expect to see Euro 7 by, say, 2025?
I think you'd probably be looking at something along that sort of timescale.
Yeah.
Regulation takes a while to get through. It's the various hoops that you've got to jump through approval, and then you've got to give time for the industry to adjust, because if you're setting emission limits for petrol, diesel, and any other combustion engines, you've got to have time to develop the technologies and introduce them. And as I think we all know, while a typical passenger car may have a 4, 5, 6 year life cycle, powertrains tend to be double that. So you are decisions, and that's, I think, you'd be talking about some of the JLR announcements this morning. They're shifting now. They think Thierry said they'd be out of diesel in Jaguar by the mid 2020s, because it's become ever tougher to meet, and hence ever more expensive. At some point, we're not there yet, that nexus point between the reducing cost of electrified powertrains and the increasing cost of internal combustion engines, it will cross over. It's probably not towards the back end of this decade, I think would be my forecast, but others would say it could be sooner.
Well, I mean, we could talk for hours, I think, Mike. There's so many fascinating subjects, and as we said right at the start, there's COVID is potentially masking some of the topics that will start to present themselves. I mean, even just that Euro 7, I'm sure that there'll be people listening to the podcast today that haven't even thought about that being on the horizon yet, never mind the implications which that will bring to the broader sector. But absolutely fascinating in terms of that view of what's happening, the impact of some of the changes as a consequence of COVID, as a consequence of the EU exit. So, I mean, it just remains to say, thanks for coming on today, and I'm sure we can be great to get you back on at some point in the future to talk about some of the changes as we've come out of COVID, and look at some of the impacts of change that will remain in the sector, and take a fresh look at how the sector performed as well would be useful from my perspective.
Absolutely, pleasure to do so. I think the one thing you can be sure of in this industry, it is cyclical. We will recover. Things will get back to some degree of normality, and I think the markets ultimately will improve. But as we've seen over the last couple of decades, going back to pre-financial crisis, there's always something just around the corner when you least expect it. It keeps us on our toes.
Keeps us busy for the future. You'll be all right yet, Mike. You're never a dull day for you, as we said at the start there. There's always something around the corner, as we've seen in the automotive sector. We are changing quick, aren't we? In terms of a sector, we're evolving quicker than ever before, I think.
Absolutely, and you've got to, because the rest of the world we haven't really spoken much about disruptors, but we know other brands are coming into the market with other technologies, and they can be new new entrants can be much more fleet of foot than existing. That's why you have to be agile. And it's all parts of the industry, not just manufacturing, not just retail, development, whatever. The whole approach to and I do think the UK is pretty good at this. Proven in the past, coming out of difficult times. We came out of the global financial crisis quicker than anyone else. Let's hope the next couple of years demonstrate a repeat of that.
Couldn't agree more.
Yeah, totally agree. Well, many thanks for joining us, Mike. We really do appreciate the time you spent with us today. Unfortunately, that's all we've got time for. You've been listening to this special Motor Trade Radio podcast interview. If you found it useful, then please like and share on social media, as it's important during these times for the automotive community to share insight, experiences and best practices. Philip and I will be recording more special weekday interview podcasts over the coming weeks and months. Many thanks to all of you for listening and supporting the podcast. Philip and I will be back with the industry headlines on Saturday. Until then, stay safe and stay well, and it's goodbye from us.